So let's look at a unique investment option for a 1031 exchange. So when you do a 1031 exchange, it has to be into another rental property, very important, okay? Now, the thing is, when a lot of people are selling a rental property, the reason they're selling is because very often they would like to get out of the management or the liability of owning a rental property. And so, you can do the traditional exchange, go into another rental property, but you still have a lot of those same issues. So an investment option for someone in that camp is going to be investing in what is called a DST, or a Delaware Statutory Trust. Now what this is it is the form of ownership around a certain type of property. So let's walk through this example where we're selling the $1 million property. We have a $250,000 basis. We're going to go into a DST, and let's just say that this is a $10 million apartment complex. Okay, and so for the $1 million investor to get into a $10 million apartment complex will simply not be possible unless they had $9 million or the ability to obtain that type of mortgage. Now, what they're able to do is roll their interest, roll their $1 million into this $10 million property, and secure a 10% ownership share of the DST. Okay, so they're 10% share of the trust that owns the DST, and the IRS gave its nod of approval over 20 years ago, saying that this would be satisfactory for the purposes of a 1031 exchange. So what this allows an investor to do is go from that active form of management and transition into a passive form of management for a professionally managed, institutional grade real estate portfolio or property that they can exchange into and essentially be along for the ride, be a passive investor in this real estate investment.